Hi, this is Stephen Carson coming at you from St. Louis, Missouri in these United States. Just remembered there's a few things I've had come out recently that you might find of interest, outside appearances, so to speak. I spoke at a conference, but that's not available for you to view unless you were there. But I spoke at a conference last year, and that was just made available by Skildings. And then talked to Scott Mannion, which was featured by New Right Post today, so that was fun. Both of those videos are on my channel. If you go to Radlib guest appearances, I believe they are both featured. I should probably double check that, but anyway, I think they're both on there. So anyway, that's that. And having missed a week last week, we're back with Black Horse this week, and let's bring him on. All right, you made children magically disappear. Hopefully they're okay.
They've gone out the backyard to yell and scream outside. So
Okay, cool. Oh yeah, you can do that. It's the brief window in Canada where you can be outside without dying, right?
yeah. Well, we've almost transitioned from dying of cold to dying of heat.
Well, there you
But
go.
it's nice. It's nice right about now.
I don't know if I ever told you I was in Moscow and I ran into the waitress said she was from Siberia, and I was like, oh really, what's that like? And she says, well, people don't really understand about Siberia. Yes, it gets very cold, but it also gets very hot in the summer. I was like, I didn't know that. So there you go.
Yeah.
Maybe Siberia wouldn't be so hard on you as you might imagine, Black Horse. You'd go there and be like, yeah, it's pretty much like home, you know?
Well, I mean, it is, right? Siberia, the boreal forest continues exactly around the world. It's exactly the same climate there as it is in northern Ontario.
No kidding. Wow.
So.
All right. You are a toughened man ready to be sent into exile. Okay, so we have decided to not take a certain story, but how about we put it this way, Black Horse? We're taking a certain story seriously, but not literally. There was a story that the deal that started in 1973, if I remember correctly,
Yep.
or a first deal that happened between Saudi Arabia and the U.S., such that petroleum from Saudi Arabia would be exclusively sold in U.S. dollars, and U.S. treasuries are involved. I don't know. Anyway, that deal that it was coming to a conclusion after 60 years or something like that, and it was not going to be renewed, and this signaled a massive shift in everything, and we're so back, it's so over, and we're so back, and all that, right? But sorry, Jacob says, Mr. Carson, Stalin apologia. Siberia isn't so bad. It's a lot like Canada. um, yeah. So anyway, back to the petrodollar. Right. So I think it's fair to say that the rumors of the death of the petrodollar have been greatly exaggerated. Uh, but it's an opportunity to give a little perspective, some of which I think we're repeating, but that's okay. So Black Horse, let me make sure I'm on
Yeah.
the right
Okay.
thing, and let's bring something up here. Okay,
Okay.
yeah.
So
So
there.
give us some perspective here.
Okay. So first of all, the agreements. There's very little public information on the quote unquote petrodollar agreements between Saudi Arabia and the United States. So we're not sure exactly what all the terms and conditions are. Um, but broadly speaking, there's two planks of the agreement. Um, or at least the piece of the agreement that the United States got. The third plank is that the United States was to provide security guarantees for Saudi Arabia, and in exchange, Saudi Arabia would uh, trade oil exclusively in U.S. dollars and would use some portion of the profits of that oil trade to buy U.S. treasuries. So this we'll deal with the second of those terms first. So how significant is it that some portion of the profits of U.S. Of oil trade with Saudi Arabia are used to invest in treasuries? Well, here we have a list of the top 10 holders of U.S. treasuries, both now and as of 2018. Um, you can see there, you can see that list. Um, Saudi Arabia doesn't make that list. If you turn to non-state actors to the non-state actors list, none of the Saudi Arabian royal family are on the top 10 list of non-state actors either. Um, so we're not talking about, and not only that, none of the other countries here are on that list because they're holding treasuries in service of the oil trade.
Right. Yeah.
Um, Japan is not holding $1 trillion in U.S. treasuries in order to trade oil. That's just not why.
Right.
Um, the United Kingdom is not holding 288 billion in U.S. treasuries to trade oil. So that element of which is often referred to by people in that space as dollar recycling
Mm-hmm.
is not. I mean, it might be a useful element, but it is not a critical peg in holding the U.S. debt structure up. If that peg went
Right.
away, all of these other things which hold the U.S. debt structure up would continue to hold the U.S. debt structure up.
I mean,
Um,
another way to put it, Black Horse, right, is that if the fake news was not fake news, and not only did the this deal end, but Saudi Arabia was like, forget it, we're selling everything in, I don't know, euros or yen or something, right? Um, no more U.S.
well,
dollars,
so
no more
this
treasuries.
is leg number one.
This would not be the end of global dollar dominance or anything.
Well, so this is leg number one. This is the U.S. Treasury market. So if they decided that they're going to just not buy U.S. Treasuries with their profits ever again, that
Yeah,
would not matter. And
yeah,
even if they decided to sell all of their current holdings of U.S. Treasuries, that would not matter.
right.
The second leg of this deal is
I'm
much more
sorry, I'm just
significant.
distracted for a moment. Cayman Islands is on this list,
Yeah,
and Luxembourg.
the
What?
Cayman Islands has a 0% income tax rate and a 0% corporate tax rate.
Oh, okay, okay. It's not because Cayman Islands citizens and Luxembourgians or whatever are holding so much. It's that both of those are tax shelters, probably, right?
Yes.
Okay, gotcha. It's rich people. It's a conglomeration of various rich people from around the world. That's what Cayman Islands and Luxembourg represents there.
Well, so one of the key structures that holds the U.S. Treasury system together is that when you make a bank deposit, the bank is compelled by regulation to turn around and buy a U.S. Treasury with it if it's a
Mm-hmm.
U.S. dollar deposit. So anywhere where you have a large concentration of banking services, like Switzerland, the Cayman Islands, or Luxembourg, you're
Mm.
going to have a large holder of U.S. Treasuries.
Charlemagne, by the way, drops in to say, reminder that the background on this deal is described in Confessions of an Economic Hitman.
Yeah. So Yeah, okay. That if you want, there are people who've done very intensive research into the pieces of this which are public,
Yeah.
and Confessions of an Economic Hitman is an excellent spot to look for that.
Hmm.
But let's flip over to the other side of this deal, because
Yeah.
leg number two of the deal is that purchases for oil in Saudi Arabia will be made in U.S. Treasuries.
Hmm.
Um, sorry, will be made in U.S. dollars, not U.S. Treasuries.
Right.
Um, so this is a look at some of the largest commodity markets in the world, and to give you a sense, crude oil is out there as like a massive outlier.
Yeah.
It's like 100 times larger than the next largest commodity market. So, and Saudi Arabia has a huge market share. I think it's like 30% of the crude oil market.
Wait. I'm
So,
sorry. That's not quite right. In terms of market size, iron ore would be a tenth, right? Because
uh,
2
yeah.
trillion, 1/10 of that would be 200 billion. So yeah, it's more like one order of magnitude, not two.
Oh, sorry. Did I say 100 times? I
You said 100
intended to
times.
say 10 times.
Yeah, 10 times. Yeah.
Yeah. Okay. So we've got a commodity market which is like 10 times the size of the next largest commodity market,
Yeah.
and we have a country in Saudi Arabia combined with the Emirates, who are also supposed to be part of the petrodollar deal, that
Hmm.
have something like 35% market share in the international oil trade, something like that.
Okay.
Uh, and so so you're talking about a demand for U.S. cash on the order of 400 or 500 billion a year
Hmm.
in order to trade oil in these jurisdictions. So that cash, source of demand for U.S. dollars, would be much more significant to the U.S. dollar than the source of demand for treasuries um, would be, in terms of the ability to kind of keep the U.S. Uh, debt thing intact.
Yeah, I guess I'm sorry, just random comment here. I guess I'm kind of surprised at how big the gold market is. That's a lot of gold moving around every year.
Yeah, well, I mean, people still pull it out of the ground,
Yeah.
and there's a lot of there's a lot of countries for, which use gold um, as part of their strategic plan.
Yeah.
So we talked about this when we talked about the U.S. dollar 2 weeks ago. That countries with unstable currencies have all kinds of strategies for managing those currencies. Uh,
Hmm.
the use of U.S. dollar reserves is one of those strategies. The use of gold reserves is another one of those strategies.
Yeah.
Um, but even just like the commodity gold market for jewelry and stuff is quite large.
Right. Yeah. Yeah. I understand, particularly in some like India and places like this, they like to buy gold.
Yeah, well, I mean, a former employee of mine bought his way out of North Vietnam by melting down his mother's jewelry. There's a certain tradition in politically unstable jurisdictions that you want to have a private supply of gold.
Right. Yep. Okay,
So,
right. So anything else to say about this? It's the news, as
well,
far as we can tell, is not real. If it was, it wouldn't really move the needle on the use of US dollars or the use of US treasuries globally. Right.
so it would not move the needle on the use of U.S. Treasuries. Period. It could move the needle on the use of U.S. dollars,
Okay.
but that would require not only Saudi Arabia to abrogate the deal, but also Saudi Arabia to make the decision to sell oil primarily not in US dollars.
Yeah. Yeah, right. A drastic shift as opposed to a little bit of a shift.
Yes, and not only that, they would have to choose another currency which is not pegged to US dollars. So there was a lot of fanfare when it was announced that Saudi Arabia was contemplating selling oil in Chinese yuan,
Mm-hmm.
but Chinese yuan is pegged to the US dollar.
Yeah.
So
So, right.
if you buy a Chinese yuan, you might as well have bought a US dollar. It's not a different
Yeah.
currency system.
Right. Right.
Um, so there's no again, like 400 million in current payments or 400 billion in current payments matters, but the current payments market for U.S. dollars is very large. You Even if the petrodollar ended tomorrow morning and there was a 100% turn away from it, that would not be enough to sink the U.S. dollar.
Another point you made that I thought was really good is that drawing an analogy here to the political structures, we shouldn't look at the U.S. Constitution, at the piece of paper there, and ignore the way the U.S. government actually now functions, much of which does not fit the Constitution at all. Certainly not the original Constitution, right? So
Well,
it'd be pretty blinkered to look at the U.S. Constitution and go, this is the way the government functions, and ignore like what's happening right in front of your eyes, with the actual functioning of the government. So similarly, the part of the fake news was to talk about like there's a written down agreement and it's expired and now everything's going to change, and that's maybe to focus too much again on sort of like a piece of paper mentality as opposed to the realities that, for example, the U.S. dollar, as we've covered recently and many times, the U.S. dollar remains just an absolute Goliath in the financial world, right? It's not like Saudi Arabia. Even if they want to, it would be kind of difficult for them to conduct business without involving the U.S. dollar, right?
Yeah, I mean, there's two aspects to this. First of all, international agreements are routinely violated when one side or the other has sufficient leverage to do so.
Mm-hmm.
So
use your favorite example.
idea,
Do it, Black Horse.
oh,
We're not ashamed of you being Canadian.
yeah. So my favorite example of this is the Canadian softwood lumber case. So there's a dispute between Canada and the U.S. that goes back like 40 years on something called stumpage fees, which are the fees charged to loggers for clear cutting areas.
Mm-hmm.
And on the basis of that dispute, the U.S. has levered a tariff on Canadian lumber for 40 consecutive years. They've lost their case in I think it's like 8 or 9 different court venues, both inside the U.S., in international trading bodies, etc.
I'm sorry, who lost? The U.S. or Canada?
The U.S. has lost their case, I think, 9 consecutive times.
And so they have been forced to obey the law, right, Black Horse?
It turns out no. So for all but 2 of those years, the U.S. has collected tariffs anyway.
Right. Okay.
So this is very typical. International agreements are honored when the power dynamics suggest that they need to be honored, or when the parties are able to come to kind of a mutual understanding. They're not honored because of a sense of like Anglo legal autism or something.
Right.
It's just, that's not like the UK didn't return Hong Kong because it was the end of a 100-year lease. They returned Hong Kong because of a power dynamic.
Right.
And that's just how these things work. And so when you say it's the end of a 50-year agreement with Saudi Arabia, even if that's true, and I don't know that there's a lot of evidence to suggest that it is true. There are people who speculate that it is true. Even if that were true, you would have to convince me that the legal agreement was what was preventing Saudi Arabia from not affecting these practices in the previous 49 years, right?
Right. Yeah. They wanted to act in their own interests. They were able to act in their own interests from a sort of a power dynamic point of view. But this piece of paper was in the way, so they just were holding back all these years, right? It's not a plausible story. Yeah. Okay. Anything else on petrodollar?
No.
Okay. Well, let's switch to our main topic, which is that I, even though I'm sort of in this world professionally, I was taken completely by surprise hearing about something about a Texas stock exchange. I came to Black Horse expecting him to say, yeah, it's just another bit of talk. It doesn't mean anything. No, he said, yeah, there'll be a Texas stock exchange. I was like, what? Why? So that's what I'm hoping that he can explain to us now.
Yeah, okay. So there's a bunch of different elements to this story. Critically, the reason why I believe there probably will be a Texas stock exchange is the partners announced are Citadel and BlackRock. Citadel, we'll go through this as we come through, but you can see Citadel there is this nice uh, black segment of the liquidity market. They own something like 10% of the entire off exchange liquidity market, or of the entire liquidity market for order execution. So Citadel is already effectively a larger exchange than, say, um, well, they're about half the size of NYSE, maybe two-thirds the size of NYSE. So they would already be the third largest exchange in North America for executions without owning an exchange. So having them as a partner in this endeavor means that you could found an exchange and have plenty of liquidity overnight. Um, so that's one of the reasons why I think this is probably going to happen.
Hmm.
But
Yeah,
let's talk about the
you're saying they. So wait, I'm sorry. Citadel is starting the Texas Stock Exchange.
Citadel and BlackRock are the two
Okay,
partners that
gotcha,
have
gotcha.
announced this.
Okay, so you're saying that slice of the pie we see for Citadel would instantly have it in, yeah, I don't know, top 10 American stock exchanges.
Yeah, it would be. So this is for the equities market. They'd be a top five, top 10
Top
competitor,
five. Yeah, yeah.
assuming that they just flipped their current volumes over, didn't get any other volume.
Right, right. So yeah, I mean, day one, they're a player in the stock exchange
Yeah.
market. So okay.
So that's kind of piece number one. Piece number two that most people don't understand is this division between on exchange and off exchange liquidity. So for this is in the equity world. So in the equity world, there's been a long-standing pattern going back to the early 2000s of moving order volume from exchanges onto non-exchange liquidity venues. Um, the two biggest players in this space are Virtu and Citadel. So Virtu and Citadel combined are about carry about the same volume as the New York Stock Exchange on basically the same set of stocks.
Hmm.
And but there's a critical difference between Virtu and Citadel and their off exchange model and the on exchange models you see for NYSE and Nasdaq, who are the two other really large players. Um, So if we flip to our next piece here,
Yeah, give me just a second. Okay.
uh, should be the bar chart, not this one.
Oops, sorry. Um, this
There we
one?
go.
Okay.
Yep. So most retail investors. So let's talk about the dynamics of equity liquidity a little bit, and then we'll come to revenue models here in a second. So most equity liquidity comes not from the what what you would think of as the investment market, either the institutional investor or the retail investor, but comes from the intermediate market, the intermediary market. So that's broker dealers that are doing things like market making, like like wholesaling, so that they're each one of these businesses is a whole discussion in itself.
Yeah,
But
yeah.
all of these businesses are involve not being the permanent long-term holder of an equity. They involve
Hmm.
trading during the day in order to make a market or in order to facilitate transactions by end investors. So
Yeah, I see.
even
I
though,
noticed the word arbitrage comes up several times in that intermediary section, right?
yes, and that's all
Yeah.
about closing down spreads.
Yeah.
So even though retail and institutional investors represent the like huge bulk of holders of uh, equity assets, uh, they're the substantial minority of they're the substantial minority of the execution business, which means that in order to capture the execution business, what you need is not exposure to the retail network. What you need is exposure to this network of people in these intermediary businesses, particularly market making, wholesaling, and arbitrage trading.
Okay, I'm sorry.
So
It's just clicking. I'd been puzzling over this when you sent it to me, and I'm just getting it. So on the left, you've got assets held, so that's going to be more long-term holds, right? And
that's the
there you do.
division of how. Yeah, so if you looked at any one time who holds stocks
Yeah,
for uh, companies listed in the U.S., that's how it would be divided up. It would be
right.
like 65% or be like 60 some percent institutional investors of different kinds, 34% retail investors, and then you'd have this small slice for what they call intermediaries,
Right.
people,
Right. So
basically
so
broker dealers.
and then it's flipped when you go to the other side, liquidity, that means who's actually making trades day to day. Um, and it's flipped, and institutional and retail goes down to way less than 50%, and intermediaries are more than 50%, right? Meaning
That's right.
institutional and retail buy and hold, intermediaries don't hold. They buy
Yeah,
and
they
sell,
execute
and
a lot of trades.
yeah, they execute a lot of trades. Okay, gotcha. This is all making sense to me
And so when you're in
now.
exchange,
Yeah.
uh, the your target customers are intermediaries. They're people
Hmm. Got you.
that are in the market making business. They're people in the arbitrage business.
So if you're selling
Um,
a stock, you want a bunch of people to hold your Apple stock or whatever. You're very focused on institutional and to some degree retail, right? If
yes,
you are a stock exchange, though, what you're interested in is not people sitting on their stock. You're interested in people who
who are
are going
trading.
to who are trading because that's where your money comes from. So the intermediaries are really your market. The other guys too, to some degree, but the intermediaries are your major focus.
Yeah, yeah.
Gotcha. Yeah. And that's why there's
And
all this
then
focus, as I know, on low latency and all this stuff, right? Because this is where the arbitrage, where they're making these fast algorithmic moves on things, and,
yeah,
right?
because all the people who you're targeting in the exchange world care, whereas a retail investor, if it takes 3 minutes to execute your trade,
Yeah,
it just doesn't matter.
right, exactly. Yeah. So those are the low latency traders, or at least some of those intermediaries, right?
Yep.
Yeah, gotcha. This is very helpful.
And then the next chart I wanted to show here
Yeah,
to discuss the exchange, the business.
this one, right?
Yes.
Okay.
So there are two types of non-exchange traded. There are two types of uh, non-exchange equity executions. One are on what are called ATSs. These are effectively exchanges that fall under a different regulatory category.
Mm-hmm.
And then there are these non-ATS executions that are being done by uh, Citadel and Virtue are hedge funds, and they execute transactions. Right? They're not it, regulated as exchanges in any way, shape, or form. If you have an order execution system, there's no best execution rule that says you have to propose routing through Citadel or Virtue.
Mm-hmm.
Um, if you're routing a client order, you have no obligation uh, to consider them as potential venues.
Mm-hmm.
So it's just worth noting that a lot of the volume that they're trying to capture, and an increasing fraction of that volume, especially after 2020, is on these non-ATSs that don't have to be considered for best execution rules. So if Citadel and if Citadel restructures its volume into an exchange, then the best execution rules, which currently don't apply to it, would apply to it, and it's likely that their market share would increase. Do you think our listeners are likely to be familiar with the concept of a best execution rule?
I don't think they are.
Okay. So when an order comes in, uh, so say, Mr. Radlib, you have an order to buy 1,000 Apple.
Right.
Uh, as the broker dealer who's going to go and execute that order, I have a legal responsibility to execute that order at the best price
Yeah.
on all my available venues.
Right.
So all of the venues which are exchanges that list Apple, I have an obligation to go and scroll through them and make sure that you get the best possible execution um, at the
And
moment the order was put forward.
and there's services that make this easy, like NICE CTA, that just consolidates and gives you the best price from all the places that Apple is being traded in North
Yeah,
America, right?
all, at the end of the day, it's all the same technology. Whether your broker dealer does the smart order routing or whether you use a third party service like the
Mm-hmm.
services NICE offers,
Yep.
same story. You've
Mm-hmm.
got an order router that very rapidly takes in the order information, figures out the best place to execute it. Um, of the venues that they're required by regulation to consider. So that is all the exchanges where it's listed, but not the non-ATS execution venues like Citadel or Virtue.
Mm-hmm.
So if I'm an arbitrage trader, I'm actually, when I make my order, I'm actually considering a different list of venues to execute that order than a public investor is having considered on his behalf. So this is an element of the market structure in the US that I suspect listeners probably are not aware of.
Mm-hmm.
So, given that background, um, if I was in the position of owning a non-ATS execution venue, I would have an economic incentive from a market share point of view to try to get myself into a regulatory position where the best execution and rules require my venue to be considered.
Mm-hmm.
So if I formed an exchange, for example, in Texas, then my execution venue would have to by law be considered, and I'd have an opportunity and a bunch of market share that I currently don't have an opportunity
Gotcha.
at. Okay, and then if we go to the
Yeah.
last
So
screen,
I just to spell it out, make sure I'm getting it. You're saying that once you join the party, so to speak, now the orders that you have could be executed by a wider market, right? Because now they're visible as people look for the best price.
yeah, that 30% or so of orders that are executed on behalf of institutional retail investors are
Mm-hmm.
subject to best execution order
Yeah.
rules.
Okay.
Almost none of those orders are going to non-ATS exchanges. Almost all of those orders are going to NYSE or NASDAQ
Gotcha.
or a similar exchange.
Yeah.
Um, so previously, Citadel could only kind of compete in that 60% or so of the market, which is intermediaries, and
Mm-hmm.
probably didn't even have access to all of that 60% of the market.
Yeah.
If they have an exchange, they'll have access to 100% of the market.
Right.
And
Adding in the
presumably,
institutional and retail uh,
yes.
investors as well. Yeah. Okay. I think I actually understand. I hope others do.
And then the next screenshot here is the last kind of element as to why they would want to do this.
Mm-hmm.
So this is from so there's a conglomerate which owns a number of exchanges in the United States called ICE. ICE owns the New York Stock Exchange as well as it owns both pieces of the New York Stock Exchange. It owns NYSE Arca and it owns NYSE Main.
Mm-hmm.
Um, and it also owns a bunch of futures exchanges and OTC exchanges. So there's a bunch of stuff here that's not really relevant. But it's worth breaking down where revenue from ICE actually comes from. So this is from their most recent financial statements. So we're looking at quarter one over quarter one 2024. So a big chunk of their revenue comes from listing fees. So that 122 million is annual revenue associated with listing fees, exchange. So this is a huge part of the exchange business
Mm-hmm.
that Citadel and BlackRock would certainly be able to support from a liquidity and prestige point of view, but they're currently getting no access to at the moment.
Yeah.
Second element is cash equity, equity options, net. So that's order execution fees and exchange fees. So that's revenue that is in a market segment where NYSE is currently competing with non-exchange execution. So that 99 million that they made this year that's the segment of their business in which they're in current competition. And then 235 million, so the largest element of revenue connected with NYSE is related to data and connectivity services. So most people don't understand this, but stock exchanges actually make most of their money selling information about what trades were executed.
Right.
So most of the money that is produced is most of the revenue for exchanges is made by selling real-time market data. If you're a non-exchange entity, you can't participate in this business in the same way. So at present,
For regulatory reasons, you mean?
yeah, yes.
Okay.
So at present, Citadel is locked out of 2 of the 3 main lines of revenue that exchanges participate in.
So I'm sorry, which one did they have of those 3?
They can compete in the cash equities piece.
Oh, okay. Gotcha. Right. But the other 2 are, well, listings only make sense for a public stock exchange, I guess. And the other one is just, they're not allowed to get involved in that.
Yeah, no, you can't publish market quotes unless you're a regulated exchange.
Gotcha. Yep.
So you can see why they would have an incentive to do this. There's large elements of the business that they presently don't have access to, and that they would have access to if they supported an exchange and moved, large elements of their liquidity there. There is presently no stock exchange in Texas of any consequence, so it's likely that if they set this exchange up, they will have the full cooperation of local securities regulators. So whatever differences there are in their execution practices uh, compared to the New York Stock Exchange or NASDAQ, it's very likely that they will be able to have a friendly regulator approve what they're doing.
So it wouldn't just be Washington, D.C. federal bureaucrats making this decision. It would local regulators, financial regulators would be relevant, or
every state has a securities regulator.
So I'm sorry, the SEC, is that strictly federal, and then these state ones you're talking about are something else? Or are they a part of SEC? Or
the SEC is the federal regulator, and then there are state authorities as well.
Okay.
And it just depends exactly what you're doing. So you're not going to be able to get away from having to comply with SEC rules.
Yeah.
But if the rule you're dealing with is not an SEC rule, and when you're dealing with listings and execution, a substantial portion of the rules you're dealing with are New York State rules, not SEC rules.
I had no idea. I thought this was all very federalized. That's interesting.
No, I mean, not all of them, but some of the rules are state rules.
Yeah.
And Texas has historically had, they have a long track record of independent banking regulators. That's why if you listen to like those ridiculous Texas National Bank ads, they point out that the service is only available in Texas and Oklahoma, I think, because the way that they operate their bank is illegal in all the other states. So there's a long history of Texas having a relatively independent security financial regulation system. So they're likely to be able to get, given that there's no exchange in Texas, they're likely to be able to get a pretty friendly regulatory backdrop.
Yeah.
So all this kind of seems like good business to me. In terms of, now turn the question around. So this is like, why would Citadel and BlackRock be interested in putting an exchange in Texas? Well, there's a
Mm-hmm.
bunch of business that they think they might be able to capture. Okay.
Right.
So turn this question around. What are the consequences of there being an exchange in Texas likely to be?
Mm-hmm.
Well, I mean, the first and obvious point is that there's going to be more competition in the market data space, in the listing space, and in the execution space. So you would expect that you would, as a retail investor, get better execution,
Mm-hmm.
and as a market maker, you'd expect to pay less in exchange fees, and as a company looking to go public, you would expect the listing fees to drop a little bit. So
Mm-hmm.
really what you're talking about is you're talking about the introduction of competition
Yeah.
and genuine competition in the market, rather because it's different state entity, different structure, um, rather than if you look at the way the equity listing market is divided up now, it's NYSE, and NASDAQ. And the kinds of stocks which are listed on NYSE and NASDAQ are different kinds of stocks.
Yeah.
So you would expect that you're gonna there's not a lot of competition at the moment in the exchange traded world for equities. So you'll expect to get a little bit better performance in that regard. Um, on the other side, on listings, there are a lot of regulatory advantages to being listed on qualifying exchanges for a variety of SEC and FINRA rules. So I suspect that unless the Texas exchange a qualifying can become large enough and attract enough attention to become a qualifying exchange in the eyes of the SEC and FINRA, you're not going to see direct competition there. You're going to
Mm.
see really you're going to see the Texas exchange more compete with NASDAQ in that space where they're competing for like lower profile listings.
Mm-hmm. Right. Except once the Texas Stock Exchange is there, well, it could become bigger, right?
Well, I mean, this is the thing. Uh, it would have to be um, if the Texas Stock Exchange had some success, it would have to have the specific kind of success that convinces the SEC and FINRA that um, that their listing standards are sufficient, that companies listed there should qualify for all the regulatory privileges that qualifying exchanges get.
Mm-hmm.
So that's the Texas Stock Exchange. Does that all? Is there anything else that you think we should talk about on this matter?
Um, well, I guess I'm just curious if you think that they would run into interference for some reason. This might slide into some political analysis of, you know, what Yankees
Well, I
versus
mean, setting up a
Cowboys, as Mike Benz always is talking about Yankees versus Cowboys, right? Could it be
yeah,
that
I don't.
the Yankees and the New York bankers don't like this, and so they really put pressure on the SEC and whatever to not allow the Texas Stock Exchange to ever start? Anyway, just your thoughts there.
Yeah, I mean, the investors behind this are not Cowboys.
Yeah, right.
They're BlackRock and Citadel.
Yeah, right.
Um,
They're part of the in crowd.
yeah. So the people who are losing here are all the New York State government, the New York City government,
Mm,
because this revenue is going to be rerouted around their state.
yeah,
Um,
gotcha.
so that those are the people who are going to be aggrieved, but they don't particularly have any mechanisms at their disposal to do anything about it.
Yeah, I was going to say
Um,
New York City could stand to not be able to afford their next wacky socialist experiment or whatever, you
yeah, so I don't think they've really got a lot of tools at their disposal. Um,
to stop it.
in the
Yeah.
listing market, you could see um, a lot of resistance to getting the Texas Stock Exchange recognized by, because it's not just the American regulators. Um, like uh, every G8 country has a list of exchanges that they use for various regulations, whether it's offering margin on securities or like recognizing them from an execution point of view or whatever. So they may be denied privileges to compete in the listing market for quite a long time. I'd
Hmm.
be surprised if they're not. Um, but I think it's going to be a case of getting that first 10 or 15% of market share is going to be very easy.
Yeah.
Um, and then after that, it's going to be, uh, you know,
No, they have to
there's
compete,
going to be a
right?
yes, there's going to be a
Yeah.
longer term battle, and part of competing in the space of exchanges is competing for regulatory favor
Hmm.
in the bodies that kind of oversee them. So they will
Right.
have to compete in that venue. Citadel and BlackRock are big boys in the financial oligarchy. They're quite capable of competing in that arena,
Right.
and we'll just have to see how they do.
Yeah. Yeah. I mean
So
that Citadel BlackRock partnership could be just to get the thing launched, and they have in their back pocket that they're going to bring more people in once they get it rolling.
yeah, well, I
You know
would
what I
be
mean?
surprised if they're not looking at bringing Virtue to the table as a partner. But
Right.
uh, I don't have any inside knowledge to
Yeah.
suggest
Yeah.
that. I just, from a business point of view, that's what I would do.
Right.
Um,
Yeah. And
but
then boom, there's another what 5-10% or something by bringing Virtue in.
yes,
Yeah. And now you're a pretty significant player. um,
yeah. So I think we're like I mean, it takes forever to get new exchanges set up and navigate the regulatory process. But uh, with the kind of backers they have behind the project, I would be surprised if they were not able to get it done.
right. Like Elon Musk buying Twitter, right? Some people are big enough that they do the things that you don't think can be done, like creating a major
Yep.
new stock exchange.
Yeah. Well, so we'll see how it goes. But I mean, people get excited about this because they think the fact that it's in, like, I saw a bunch of comments on Twitter about preparation for Texit or whatever. I
Oh,
don't think I don't think any of that is really relevant.
yeah,
Um, the like the Texas Stock Exchange, based on the partner profile, is going to live and die very likely competing on S&P 500 equities. It's not going to be
hmm.
their primary revenue line is not going to be independently listing small Texas companies.
Right, right, right.
Um,
Yeah,
I just don't imagine that.
yeah.
Um,
They're jumping in on an existing market, trying to carve out a piece of that existing market. It may not necessarily mean a big expansion into a new.
well, and I think they've
Right.
selected Texas because I think they have probably a deal with local government to put it there.
Okay, so
So
this is part of the reason why you took the announcement so seriously, because knowing the people doing it, BlackRock and
yeah,
Citadel, you're figuring they probably had a lot of ducks lined up before they let anything slip about this, right?
yeah. Well, and they like these are huge organizations. I'm quite sure that they venue shopped it because that's what you do when you
Yeah.
like Citadel is headquartered in Florida because they venue shopped away from New York State once.
Mm-hmm.
I'm quite sure the same people for the same reasons shopped at the same half a dozen red states
Yeah.
and said, who can give us a good tax deal and a good regulatory arrangement to
Right.
facilitate the exchange we want to open to start eating Nisi's lunch.
Yeah, I mean, I guess not a Texit thing, but just in terms of the balance of power within the United States, I suppose if there's any implication, and I'm not saying the big magnitude of it, this is some business going to a red state and away from New York, right?
Yeah, I mean,
So
this is something
that's
that
something.
we've talked about as a broad trend. the amount of U.S. industry that is relocated into the South and the Southwest is
Yeah.
just enormous.
Right. And this is another.
And
Looks like this is another example, basically. Yeah.
this is another example,
Right.
and one of the very first examples in the world of high finance.
Right.
Citadel moving to Florida. I think that was in 2020. That was a really big deal.
Mm-hmm.
So, we'll see. I mean, they did that for very specific reasons at the time.
And speaking of there's financial centers around the world, but speaking of the U.S. strictly, as far as I can tell, historically it's been basically Chicago and New York where financial stuff happens, and that's 90% plus of the story.
Yeah, Chicago,
this
New
kind
York,
of.
and Boston.
Oh, in
But
Boston. Okay.
New York is more dominant today than it ever has been in
Yeah.
the history. Maybe you went back to like 1840. Maybe New York was more dominant then, but it's more dominant than it has been in a very long time, for a whole variety of reasons.
Oh,
But
this.
in the
Go ahead.
2008 world, they got a lot more dominant. But
Yeah.
also the entire West Coast financial scene kind of was swallowed up
Mm-hmm.
in a series of unfortunate events that have occurred since 2008.
Yeah. Right.
So
Yeah. So it's more centralized, more just those handful of areas in New York in particular. Javier Oliva says, if this happens, Texas will go blue. Well, I think I understand that that's a trend that's been going on for reasons entirely unconnected to the Texas Stock Exchange. I don't know how much the Texas Stock Exchange contributes to that. Do you have strong opinions on that?
The Texas Stock Exchange is going to have like 1,000 employees, maybe
Yeah.
2,000 employees.
Yeah.
It's not going to flip the state
Yeah.
electorally.
Right. Jimmy Thomas sends in a super chat. He says it's best to think of international law as good manners rather than a monopoly on violence. It's enforced via reciprocity. Yeah, so very good point. He's saying that there is a major asymmetry between us living under the laws of the U.S. federal government, the Canadian government, our states, and so forth, and international law. They're both law, but the power dynamics are quite different. In particular, you have the monopoly on violence with states, and in international law, it's states and states, basically.
Well, the
And they
U.S. has
are,
kind of tried to enforce a monopoly on violence in international law, but it
yes,
has not succeeded.
right. And we've kind of highlighted that in a way with our analysis of the sanctions and how many countries did not participate in sanctions on Russia. That'd be sort of an example there, right? Because if the U.S. could have, it would have basically declared Russia an outlaw and made everybody put sanctions on Russia, right? As the punishment for Russia's crime as an outlaw. That's not what happened at all. Most of the world's population do not live in countries that are putting sanctions on Russia. In fact, their countries are trading heavily with Russia, even more than ever. So within a state, we deal with the monopoly on violence that our state government has, our national government has. In international law, states and states, it is a sort of anarchy, which is not to say that everybody's an equal player in that anarchy, but you do not have a single hegemon laying down the law, having a monopoly on violence. If somebody doesn't do what the hegemon wants, like doesn't sanction Russia, the hegemon is able to just put a stop to it. That's just not the system we live under, right? So yeah, that's my comments on that. Any further comments on international law's good manners?
Yeah, international agreements also fall in that category.
Right.
So, like a key element of domestic law is contract enforcement, but there is the enforcement mechanism for international contracts is ultima ratio rege, the last argument of kings.
Mm-hmm. Right. Yeah.
So
Yeah. I mean, I know there's International Court of Justice and stuff like that, but well, as we're seeing, the
Yeah.
International Court of Justice is like, and the other one, International Criminal Court, I think. Anyway,
Yeah.
they're coming down on Israel because of actions being taken in Gaza, and Israel just ignores them and just keeps doing what it does.
Well, I mean,
So,
amazingly, I think the U.S. has like I think the am I wrong that the U.S. has taken a strong stance against the International Criminal Court for their indictment of Netanyahu?
right, yeah, they're trying to punish them for them trying to punish Netanyahu.
Yeah.
Yeah,
So
so
you're definitely not looking at a standard legal relationship there. It's something
exactly.
quite different.
It's just it's basically just politics at that level, right? I mean,
Yes,
I guess you could
exactly.
say it's always politics, but there it is literally just, you know, U.S. and Israel are allies, so U.S. doesn't like what this court did. It doesn't feel some obligation to obey the court. It just ignores it and, in fact, goes after it. So, you know, it's Andrew Jackson's famous statement. The Supreme Court issues something he doesn't like, and he says, "Okay, where are your armies to enforce this ruling?" You know. Well, same
Yeah.
thing. Where are the International Court of Justice's armies? It doesn't have any. Right? So,
It turns out they're commanded from the State Department, right?
excuse me. Yes. Um, okay. So I think that is what we are covering today. Thanks everyone for joining. I actually don't know what I'm doing next week. I've had a conference and I was preparing a talk for it, and so that was sort of swamping my attention. I finished up the Origins of Modern Science in the Middle Ages series. Recommended to you. I've found a very interesting material, and I'm just surrounded by books that I would love to read and to cover on the show. So I'll have to think about what I'm going to do next. And my other co-host, who hasn't I haven't done much with this year, Ryan Turnipseed, is about to get married. So congratulations to him. I'll be there with my wife, and but that's got him busy. So I'm not gonna bug him for a new series right now. Okay, so thank you everyone, and I will come up with something for next week, and we'll see. Suggestions, of course, are welcome. So, all right, thanks, Black Horse.